All right, Jesse, we're in earnings season now. We're all-time highs. I mean, people tend to get a little jittery around all-time highs. What are some of our favorite strategists saying out there?
Yeah, so let me kick this off with High Mount Research, Willie Delwich, who just breaks it down to kind of 5 giant, themes of the market. And he puts the scales, tilted towards opportunity right now with sentiment, which I think he's using negative sentiment as an opportunity.
Right.
Breadth and trends and momentum, I should say, on the opportunity side. And on the risk side, economic fundamentals and valuations. Valuations we've talked about, that gets a little,
I kind of disagree. I mean, valuations on a market cap weighted basis, maybe, but that's because...
Totally fair. And you may hear me at the end of this, discuss a little beef with the economic fundamentals.
Yeah, and the next one is Ryan Dietrich from the Carson Group talking about the S&P closing above its 20-day average. That's a 1-month average for 60 days in a row. Longest streak since 1998.
That's wild. There's been some good years in there since 1998. And so he says, the returns 3 months out have always been positive. It's not a huge sample size.
Yep. And there's no guarantee of that.
That's right. And the average of 12 months later is considerably higher. And so, again, another reason to remain positive despite the jittery nature of all-time highs. Next tweet comes from Sentiment Trader, which is Jason Gepfert, and he says that so far this year, the cumulative gain by buying the dip on the NASDAQ has really treated you well, and that is another bullish signal, or at least historically has been.
And then finally, the yield curve, I mean, it's steepening globally. That's good for banks.
Yeah. Well, this is where my beef maybe with the economic fundamentals being on the risk side. A steepening yield curve has historically meant banks are much more willing to lend.
Right.
And that's what spurs growth and, development and all these other things. And then when you consider this final chart, which shows the spread from a year ago being negative generally across the globe to being, mostly positive now around the globe, points to the margin expansion that these banks typically have seen, or their willingness to lend more. So, and
those are all positives.
Those are all positives, and I'll just say it. We haven't mentioned AI.